We all know that stocks can be a great investment, but how do you actually buy them? Well, these days it's pretty easy to trade stocks. So in this video, I'm going to cover everything you need to know to get started, including finding a broker, making a plan, picking the right stocks, how to order your stocks, and how much money you need. As a heads up, I'll be taking you through the process of buying shares using eToro's share trading platform, which is the sponsor of this video, but the same basic steps will apply whichever platform you choose. First, how does share trading work? Well, a stock represents a share of a company. When you buy a stock, you own a piece of that company. The basic idea is that you buy them for a low price and sell them for a high price to make a profit. How do you trade them? Well, pretty much the same way you trade goods over Amazon or eBay, over a digital marketplace. With share trading, this is the stock market or the stock exchange. In Australia, we have the Australian Securities Exchange or the ASX, and in the United States, there's the New York Stock Exchange and the NASDAQ. Now on to the steps. Step number 1, find a stockbroker. To buy and sell shares, you'll need to sign up with a stockbroker. You've got two main options here. Online brokers, aka share trading platforms, or you've got your full service brokers. These are your traditional old school brokers like Goldman Sachs or Morgan Stanley. They do all the trading for you, and sometimes they offer advice. For most of us, an online share trading platform is probably the way to go because the fees charged by full service brokers are high enough that if you're not investing a lot of money, any returns you make are unlikely to cover the costs. There are so many trading platforms out there, so visit Finder to help you compare. The link is in the description below. You'll want to find a broker that suits your trading style, which depends on the kinds of stocks you want to buy and how much you'll be trading each month. Also consider the brokerage or commission fee. This is the fee charged by your broker every time you buy or sell stocks. Brokerage fees are around $10 to $30 on most share trading platforms, and anywhere from $50 to $150 or more for full service brokers. Other fees charged by brokers include the currency conversion fee for foreign stocks, account fees, custody fees for US stocks, and inactivity fees. Once you've worked out which broker you want to go with, it's time to sign up. Sorry, you need to be over 18 and a resident of whichever country the broker is registered in. Step number 2, plan before you buy. This is the part that people usually hate. I know, nobody likes to plan, but it's seriously important if you want to buy shares, because they're risky. I'm not going to go into detail because that's a whole video in itself, but generally speaking, to build a plan, ask yourself the following questions. How much can I afford to invest in stocks? How much can I afford to lose? Often that's one and the same question. How long can my money stay in the stock market? What will I do if prices start to fall? What about if prices start to rise? Once you can answer these questions, you can start mapping out the types of stocks you want to invest in. Remember, the more companies you hold from a diverse range of sectors, and the longer you can afford to have money locked into stocks, the less risky your investment is. So it's important to have a timeline and some actions in mind if things change. Step number 3, pick your stocks. This is the fun part, but it's also the most challenging. If everyone knew Apple was going to be a winner 30 years ago, we all would have invested. But look, here are a few tips to get you started. Follow broker ratings. You can follow the ratings set by the big investment firms or analysts that you trust. For the big stocks, they'll usually set a price target, which is the price they believe, they don't know, the stock will reach within the next 12 months. Pick a company you believe in. Do you think it's all making the right moves? Is it ethical? Pick a company you know. Do you use its products? You'll have a better idea if it's doing well or if it's failing its customers. Debt levels. Make sure the company debt is under control. Look at whether the company is expanding, maybe overseas or into new products. If it's not growing, maybe it pays dividends. And if it's doing neither, well, why would you invest in it? Plus, if you're on a social trading app like eToro, you can track what other top traders are buying and selling to get ideas. For tips on how to value a stock, there's a link in the description. Step number 4, order the stocks. The price of a stock can be anywhere from under 1 cent to thousands of dollars per stock, but there are some rules around how much you need to invest. For Australian stocks, there's a minimum $500 investment for every new ASX company you invest in. So if Afterpay has a share price of $50, you'd need to buy at least 10 shares if it's your first time buying. The rules change depending on which country the stock is from. For example, you can invest as little as a few cents into US stocks depending on your broker. Meanwhile, some brokers, eToro included, also offer fractional investing, where you can buy fractions rather than whole stocks. So say Netflix is priced at $500 a share, instead of investing $500, you could buy 1/10 of a share for $50. Okay, so now onto how to actually buy a stock on your trading platform. Again, I'm using eToro for this example, but the same basic rules apply for any platform. So navigate to the order or trade section. In this case, there's a search function at the top. Enter the company name. I'll go with what everybody's trading right now, Tesla or TSLA. And hit trade. I'm going to select the buy option. For now, you can ignore the leverage stuff. If you're looking to buy stocks, you keep it at 1x leverage. Anything above that and you're trading derivatives, which is riskier, and that's for another day. Depending on the broker you're with, you'll usually have a few different order types to choose from. There's the basic order called a market order. This is where you buy at the latest available price. So say I'm wanting to invest $5,000 in Tesla. The US market is shut, but when it opens, my trade will go through at whatever the stock is priced at the time of the execution. Then you have your range of limit or conditional orders. This is where you can select a specific price or a price range for what you're willing to buy the stock at. Exactly the same as bidding at an auction. You have the highest price you're willing to pay, but ideally you'd like to pay for a lower price if possible. You can set these with limit orders. There are all different kinds of limit orders, and unfortunately, brokers call them all different things, some of which you can see on the screen. Okay, so back to the trade. Here we have a market order and a limit order. eToro calls it a rate order. So maybe I've looked at Tesla's price chart and I can see that it's been rallying like crazy, but I think it's going to fall back to these levels. If I wanted to, I could set a buy price of, say, $1,800. Next, enter the number of stocks you'd like to buy or the amount you'd like to invest, and confirm purchase. Then if Tesla's price falls to $1,800, the buy order will go through. Congratulations, you've bought some shares, and you can do the same process in reverse to sell. If you've bought Australian shares, you should receive an email or letter confirming your status as a shareholder, along with your holder of identification number, HIN. Next step. So your next step will be to monitor the performance of your stocks. If you're a long-term investor, try not to check it more than a few times a year. If you're a day trader, well, you'll be glued to the screen. If you've bought dividend stocks, you'll either get those dividend payments paid into your account, usually twice a year, or you might choose to reinvest them automatically back into your stocks to compound your profits. And don't forget, you will need to pay tax on any profits that you've made from share trading, which only applies after you've sold your shares. So around tax time, you'll get a financial summary from your broker detailing your taxable income, which is total profits minus total losses. So what are the pros and cons of buying shares? Let's start with the pros. Potential to earn a profit or grow your wealth. If you hold a diversified portfolio of stocks or an ETF, it can be a great long-term investment, including for retirement. Dividends are a great source of income. Now to the cons. They're risky. Worst case scenario, you could lose all your money. It can be stressful because the stock market is so unpredictable. It's easy to get drawn in emotionally and make bad decisions. Well, that's it from me. For more information about anything I spoke about and to get started investing, check out the links in the description below. And for more investing tips, subscribe to our channel.